want you guys to start looking at structure. I want you guys to do the most important thing you can do. When we look at structure, okay, the market always moves up and down. And then at some points it'll break structure and then move the opposite. So this is all you guys are trying to find, okay, is when is there an uptrend and when is there a downtrend. To find this is literally just by looking on the higher time frames, and then you literally will mark those areas. So let's say for argument's sake this is the weekly, okay, and every single one of these areas are a high and a low on the weekly. On the higher time frames you can just get a better understanding of what's happening, and also when a level breaks then you can kind of I would actually say you can kind of guarantee it. But the biggest problem that we always have, guys, is how big is your account? So now when that happens, you now need to understand that when these areas break, you don't want to just get into the market, you want to look for confirmations. Confirmations are just, for argument's sake, if this area here had to retrace like this, so you see how this thing came back up like this over here, you just want to see rejection levels here not going any higher. So they call them base value candles, which literally just look like this, guys. Base candle is very important for you guys to understand, because then you're going to really catch what I'm trying to explain to you guys. So a base candle just technically means that the wick together, so if we take the wicks together, okay, like literally just pretend that's the wick and that's the wick, if we take them together and we put them in a line and they're bigger than the candle itself, so this would be a sell-off candle, let's just make it like that. Okay, so now we've got our red candle, that's called a base candle, okay. So when we see these, we want to make sure that they're in the right place. So we don't want to look at this base candle like randomly over here just because that's support and resistance. Why? Because most of the time people are going to trade support and resistance and they're going to get knocked out. It doesn't mean that it's not bad to trade, but you need to wait for a base candle to appear to actually make sure that it is in line with the break of a low or a high. So technically these bases can also happen at the break of here. So if you wanted to trade this area, the support and resistance, make sure that these candles are there. This is what we want to try and make sure we're looking for. It would technically be like, so if I said I was going to sell on this level here, we also want to try and see momentum. Okay, this is called a momentum candle. It's much bigger than your base candle. Now, when you guys start seeing these candles, okay, and guys, I don't want you to worry too much about like, is it a bullish candle or is it you'll know straight away if it's a bullish or bearish candle. It's not hard to tell. I mean, it's not hard to identify where the market's going up or down. We just want to make sure that it's like that. And then the inverse of that. So these are the two that I want you guys to make sure that you're looking for, okay? So base candles and engulfing candles, you could call them. But we call them momentum candles just because that's technically where they're going, you know? We're looking for the direction that the market really wants to go in. Can you guys see that? So guys, these are the things you guys want to find at a point of structure. And then we have another bigger one over here. Everyone's trading these areas over here and the market pulls back down. And then it hits this area and then starts to give you confirmation, which just means rejection. So we're just gonna focus on a bullish trend. And then next week, if you guys need to refresh it, then we will go into the rest, okay? Another thing is candles are so easy to read, but if I show you something like this, if the candle's that big, see the wick's that long, the other wick's this long, would you guys say that these two wicks added together is bigger than that candle? So that's not called a momentum candle. Momentum candle actually is, guys, is when the candle is big, okay, and the wicks are tiny on them. Like there might only be one sometimes. And when that happens, okay, we can literally say to ourselves, okay, those two candles fit in this body. That's a momentum candle. Now what we're trying to find next is either a smaller candle right next to it, okay, that's red, and that's all we do. So that's not what you want to trade. This is what you want to trade. Then the opposite also applies for your base candles, guys. If there's just a small little wick here, right, then that's not technically a base candle. Our base candles also want them to be much bigger than the body of this candle. But it's okay to take the trade if you do see the momentum candle and you do see a small, like, just make sure that this wick, right, isn't like this. Does it make sense? But this is all we're trying to do. We're trying to find something like this, okay? And then you also would have like maybe the wick like that, and then the other wick could technically be like this, okay? So you see these two wicks added together bigger than the body, and this wick falls inside the body as well, okay? Then you kind of like, I found something in line with structure, which just means are these candles here in the uptrend, and have they made sure they haven't made a new low? Because now we're looking at, remember, we're looking at here. So now all I want you guys to remember is when it comes to trading is, okay, I now know that that's the lowest point. If this point breaks, that means the market is looking to move the opposite way. It won't definitely, but it is looking. Now you guys also must remember, when a market makes a new high, there is literally a 60% chance that it's going to go higher. So this is why it's actually quite easy for you to understand this if you're looking on a higher time frame. So you can always find the structure, then you can be like, is it going up? Is it going down? Has it broken any lows or has it broken any highs? And then once you determine that, then you can go look for these candle patterns. And we're gonna go and do multi-timeframe analysis there. This is why trading becomes so simple. So now, what we're looking for is if there's a new high, you can say to yourself, okay, cool, new high is made on the weekly or the daily. Then you can say to yourself, okay, now all we're doing is it broke this high. Is there any of these candles here? If there aren't any of these candles appearing there, then you don't want to trade them. We're going to try and find some sort of area that has these candles for the pullback to find a base, which is this candle, and then the momentum candle. Now let's go and actually apply this in reality. Now look how simple this is. So I'm gonna take it from this perspective. I want you guys to tell me what kind of trend are we in. Moving upwards, it's broken a high, okay? That's the low, and it's broken a high. So we are looking on such a high time frame, and everyone's like, why do I even need to learn this? It's just so you guys understand what's happening. Now, while we're looking at this, you can see it was an uptrend, it broke the high, and then it came down, and it made a good bottom here. We want to make sure that this would have been a long time frame though, guys. But I want you guys to do this more often, because you guys are going to start seeing the beauty in it. So we would say to ourselves, okay, this broke this low here, but on the left-hand side, did we find any of these base candles? We did. Can you see, here's one of them. We're going to highlight this area. This is why I say to most people, you need to have a good risk management. You need to be able to take so many trades and not lose a lot of money, that when you do catch the right one, it's going to give you a lot of money back. Okay. Now, also the cool thing is with this trade over here, guys, we had the liquidity. And the reason I'm showing you guys on a higher time frame is so you can find better positions, okay? So we're gonna go deeper, so just stay with me for a little bit. That technically means it wants to go higher. So once that has happened, it took the liquidity and just shot straight back up again. So now at least we know, okay, this is in an uptrend, we saw what's happened. Now, how do we find the next trade? Okay, so we cannot take another trade unless we find a new high. So if you want to buy this market, guys, you cannot and should not look for another buy until it breaks a new high. That's the rule. If the market had to come back down to here, that's totally fine. You can trade it again because this is technically proven itself. That's the structure. Until the market moves lower than this area, on a weekly, it's still a bullish trade. And that's the biggest mistake most people make, is they see these sell-off areas and like, oh, let's take them, wada, and they get destroyed because the market still wants to go up. We haven't made any new lows technically. So now this becomes a new low and this becomes a new high. So I'm just going to fast forward this thing quickly just to see what it does, so I can explain to you guys what to do. So pretend that the week's going on, boom, okay, now we saw something. Anyway, so now the nice thing is, guys, we've just made a new high. Can you see that? We broke through a structure. So now we know, okay, cool. What actually happened here? Now you go back to your rule book and you say to yourself, okay, what actually happened here? Can you guys see again, another base has been formed and another momentum candle? The reason I'm doing this again, I'm just gonna keep repeating it to you guys, is remember, we're trying to figure out like, how do we get into these trades because we need money? So now this would be a great one. So remember, at any given point, the market's gonna make a new high. So we have made a new high from this level. So remember I said to you guys, you got a 60% chance, which is better than most. It's literally, you got 60% chance. You technically should take the risk. So when the market came back down to this baseline, we can say to ourselves, okay, I see you are definitely in the area of the buy. I want you guys to draw another line in this area and say to yourself, did it bounce? So structure and support and resistance are very important to understand when you're looking at the market and lots of data. So we just want to make sure that there is a position that bounces from the area down and up. So if we look to the left, it pulled down here and bounced from this area down. Then now we want to see, did it bounce anywhere else higher? Yes, it did over here. See, it came close, it bounced, came close, bounced. So we do have a very good support structure here in this area. But we're obviously not trading in the momentum candle. We want to trade within the base of a trade. That's normally where we want to trade, inside the base. So between the candle and the wick, this is where we want to enter, and always stop loss just underneath. Let's go down to the daily. Let's see what it's telling us. So this is quite cool, guys, because the more you do this, the easier it gets. So we go into the daily, and now we're like, okay, there's some liquidity over there on the left. Do we have any more base candles? We do down here. Can you see that? Remember, this is the daily time frame, guys. So that's a big candle. An entire day went by, and that's how hard it pushed. It's candles, small body, big wicks. So now we're in the daily, and then it came back down. It took out some liquidity. There's liquidity, there's liquidity, there's liquidity. It dropped, hit, and moved. Okay. Now we do it again. You go to yourself, okay, so I know there's structure in this area. It's just gone through liquidity. It's bouncing in a very good demand zone. These are the demand zones that have a base and momentum candle. Let's see if we can find it in the 4 hour. So the further down you go, guys, the more times you start seeing the candle pattern, the better it is. So let's go and see, do we have it again? Okay, and then we do. Momentum candle, base candle. So now you're already like, oh my word, this is definitely in the right place. I have to take the trade. And that's all that it's about. If you have a plan and it doesn't work out, I want you guys to be like, okay, that was great, it worked. Tell yourself JOMO, joy of missing out, because you know that trade could have been good. Now you're just gonna find another one. Let's try it again, let's see. Okay, now we know market has broken higher, so we're still in an uptrend. Now we know, okay, what are we looking for? Those engulfing candles. Let's go back to our daily. Now we're gonna just look for those candles again. Let's go and find a base candle and a momentum candle. Last high from the left hand side. Okay, that was the last high there. So that could be a support and resistance. That is definitely a rally base rally. Okay, we're putting this here because that broke the high. Now let's keep playing it on. Broke the high again. And the higher time frames help you so much. So we actually had 2 continuation patterns here. We had the rally base rally, this movement up, okay, then we based out, went sideways, and then we rallied. Then we've already got another area here that decided to pop up. Checks out, hits it, and moved. So when that does happen and it breaks the high, what we have to remember is that we're gonna say to ourselves, okay, a high was broken. Where's the next low? So the market is only in a downtrend when this level breaks. So we tell ourselves, okay, cool, we don't really need to worry about that. Let's hold this. And then also this area is not fresh anymore. It's already been hit, so you don't want to be trading there. So now I'll take this. Remember, this area got hit and moved higher. Now we say to ourselves, okay, that's the high that broke. So now what we're going to do is we're going to move our demand zone to the next area. And this is why I say to you guys, please, dude, when you see these trading opportunities, I don't care what happens. If you're trading in here, stop loss right underneath. Because if it breaks this, it's most probably going to go down. Now keep your risk as small as possible. Cool thing is, guys, let's go quickly look at the 4 hour. Is it there? Oh, look. Yes, there's definitely one. Look at those. There, tiny momentum. See? Look what it did. Created liquidity again. Just before the area, licked in, went. Remember, you guys can go even further down. 2 hours. There we go. Perfect momentum candle and a base candle right here. Because once you understand that, it gets even easier. So let's just keep playing this out and let's just see how we can look at it again. And it's been the most mind-blowing thing I've ever come across, because now I don't have to worry about trading. I literally open up my chart, I look for these things, I make an alert, and I trade them. Let's carry this on. Let's see, it doesn't make a new high. See, it touches into that area again, shoots up. So this is why I like it so much. So you see how it broke through there so easily. So what you guys are going to do, if that ever does happen and this demand zone gets destroyed, all I want you guys to do is watch the market for a little bit. Don't try get into the trade again, because you never know what's going to happen. So let's just watch and see what happens. Okay, so we're going to play it again. Remember, if it breaks a high, then we can trade it again only.
A few moments later.
See how long it held for.
2,000 years later.
So let's go back. We have definitely broken through this level. Can you also guys see that this momentum candle and everything happened here? This is where you get screwed. Don't trade these places if you're in a uptrend. So if you're going up and you see these patterns, it's actually great for you to mark them off. Okay, because technically what normally happens is the bases end up happening on these patterns as well. It's what's so cool to know this. And also higher time frames. So we now have another base and a momentum candle. Okay, so just highlight it. It hasn't broken the high yet. It is okay to trade them, guys. Just remember you might be wrong. More than likely. And let's see what happens. Okay, let's go. Boom, breaks the high. Dude, look at this, guys. You see it touched into that area and shot off again. Can you guys see how simple this actually is? Rally, base, rally, touches, goes. So, and now the nice thing about having a higher time frame, guys, is you already told yourself you're going to trade here, and the 4-hour area was here. So you could have entered here, but it dipped into the daily rather than the 4-hour. That's why I want you guys to go higher time frame first. If the pattern aligns with a lower time frame, that means it's even better. Okay, and you see it came into the area, touched it, did go up, okay, but there wasn't enough liquidity. So it dropped in, pushed up and rallied. Oh, didn't break the low, still on an uptrend. Breaks the high again and keeps going. See, so we can rinse and repeat this strategy over and over and over again, guys. All we're looking for, right, in this whole thing, these kind of candles, not these ones. So that's technically the trading plan, guys. Weekly time frame first, figure out where we're going. Okay, daily, find your patterns, what direction are we going in, find base momentum candles, and then it must be in line with structure. That is the trading plan, period. There's nothing else needs to change. And everything flips when it's bearish, which I'll show you now quickly before we end with gold. So guys, please keep your eye out for such a big momentum candle, and that's on the